again for having me here. This is a really, really nice initiative. I listened in on it last week, and I'm super excited to present here. Yeah, it's super innovative, and with the use of Slack, I'm looking forward to reading everyone's comments and feedback on the paper. The paper is very much evolving and work in progress. You see that I've already changed the title. I'm going to focus on risk taking because there's a lot of different economic preferences and a lot of stuff going on. So I'm trying to boil it down to maybe one, at least one aspect of the paper. It's co-authored with Dibu Yin and Yin Lau, who are both at Macquarie University in Sydney, Australia, and Yong Lu, who is at the Wuhan University of Science and Technology. And this is essentially where our study will take place. What we're going to do is look at risk-taking during the coronavirus pandemic on a subject pool that is in Wuhan. So it goes without saying, essentially, that the coronavirus pandemic has really manifested as this unprecedented and really unexpected shock to economies around the world, but perhaps more importantly to individuals and households in basically every country or almost every country around the globe. We believe that understanding how these individuals internalize the shock and potentially update their expectations and beliefs and ultimately their behavior is going to be crucial for understanding and determining if the policy responses that are being kind of thought about and put forward and put into action are actually appropriate. On one hand, changes in individuals' risk-taking could have pretty significant immediate impacts on things like financial investment behavior and consumption. On the other side, or also related, is that the experience and the exposure to this event, this shock, is likely to vary pretty considerably depending on how individuals are exposed to it. And kind of looking at existing literature, we think that this might have a differential impact on economic choices and ultimately on different kind of economic outcomes. So what we're going to do in this study is examine how individuals' tolerance for risk is going to be affected by these kind of differential exposures to the pandemic. Again, coming from the existing literature, we know essentially that these types of formative experiences, financial crisis or kind of large macroeconomic shocks, for example, are likely to affect future risk-taking. There's evidence that suggests it causes individuals to refrain from opportunities or risky opportunities. I have a paper which shows that these formative experiences cause individuals to actively reduce their risk-taking in financial markets in the future. We also know that kind of beliefs about mortality and potentially non-financial decisions also affect economic decision-making. But we know relatively little about how individual preferences and expectations and beliefs may acutely change. So how are they changing in the midst of the experience or the crisis itself? And that's kind of currently where we're hoping to contribute to this literature. In the paper, we ask basically three questions, more or less. We want to understand how risk tolerance evolves from normal times to essentially the peak of a worldwide health crisis. And hopefully our setting allows us to continue to explore this kind of even after the health crisis is hopefully and potentially kind of mitigated. We also want to understand how heterogeneity in experiences and exposure affects these changes in risk-taking or affects risk-taking in general. And we want to understand through what channel. How is this kind of linked to changing beliefs about optimism and the economy in general? How are these evolving during a crisis, and how is it linked to what we find in risk-taking? So let me just give a quick kind of overview at the main findings. Essentially, we find that individuals with a higher exposure to the pandemic, and we're going to measure this through where they're currently situated, and I'll get into that a little bit more detail. We find that this higher exposure causes individuals to allocate less wealth to a hypothetical allocation test, so they are more likely to invest in the safe asset rather than the risky allocation. We also find that higher exposure to the pandemic essentially leads subjects to become more pessimistic about their own outcomes. And we believe this is linked to what we're finding with the allocation finding, the allocation decision. In general, we observe a pretty large decrease in general measures of risk attitudes for everyone. And this to us suggests that these closely experienced shocks in the middle of a crisis acutely affect risk taking, and we argue this is partially through a channel of beliefs and expectations rather than general preferences for risk. Okay, so let me tell you a little bit about the setting. We conducted a survey with graduate students at the Wuhan University of Science and Technology. The study was focused on kind of some questions about risk-taking, individuals' beliefs in luck, their expectation and beliefs in the economy in general, and kind of some ideas also related to superstition. We did this first wave in mid-October. Obviously, this was for a different project than the one I'm presenting today. And this was, about 8 weeks or so before before the initial reports of the coronavirus in China at all. So what happened then was we collected that data and started looking at it, and then the kind of winter break began as planned. The semester ended early January, so January 11th, and the students in our subject pool were able to return to their homes as planned for essentially the largest Chinese holiday, which is the New Year's celebration. At this time, there was essentially no kind of discussion or no reason to be alarmed about what's today is a global pandemic. There were potentially some initial cases in China, but nowhere at the level as we've seen in the last months, of course. So students were allowed to return home as planned. Our sample consists of students who are at the university in Wuhan. About half of them come from other provinces, and many of them from outside of the city of Wuhan. So by January 23rd, the kind of tables had turned considerably, and things had surely become elevated. By January 23rd, all incoming and outgoing transportation to the province of Hubei, where Wuhan is the capital, was completely halted, and quarantine conditions as we know it began to take hold. These were kind of introduced in different waves, but by early February, and February 15th was really the peak. By February 15th, Wuhan and the entire province of Hubei was essentially completely locked down. There was more than, almost 60,000 reported infection cases, and, almost 2,000 deaths. Lately, this kind of death estimate has been revised upwards, so potentially more at this time also were deceased. And we administered our kind of second follow-up wave of the survey in the end of February, so it spanned kind of February 28th to the first couple of days in March. We followed up with the second survey wave online, and we were able to actually have a very high retention rate, and kind of reached almost every subject that we had in the first wave, giving us this kind of panel dimension of our survey questions. So essentially, wave one of the survey takes place where all of our subjects are located physically in Wuhan. We had 257 individuals at that point. Wave two was then kind of distributed via WeChat, and I'll talk about that in just a second, where we had, an 88% retention rate, so 225 subjects. In our second wave of the survey, we captured kind of precise geo-coordinate data from our subjects from the survey tool, which allows us to kind of pin them across a map of China and figure out exactly where they are at the time. And this gives us a couple sources of variation. It gives us variation over time, since we have this panel dimension, and intensity of exposure to the coronavirus pandemic. And we're essentially proxying this by where they're locating. So we have variations in infections and deaths, because this differs significantly by province. And, also the actual conditions of the quarantine which individuals were exposed to and living through varied pretty considerably from province to province. Now, here you see a map of China. Highlighted in red is the kind of large province of Hubei. In this center city here is Wuhan. So as I mentioned, about half of our subjects are originally from the Hubei area. And yeah, I think a quarter or so, or a third, about, yeah, a little bit less than a quarter are in Wuhan specifically. And then the rest, kind of the other half of our students, are distributed across the country of China. Now, you most likely know that Wuhan is essentially kind of ground zero for the coronavirus virus. You might not know to what extent, though, compared to other areas of China. So what we're doing here is simply plotting the cumulative number of infections and the cumulative number of deaths by the Hubei province compared to all other provinces in China put together. So again, Wuhan is within Hubei, and in the solid lines show that the number of infections and the number of deaths are essentially 5 or 6 times what they were in all other regions of China put together. And this dashed this dashed line here just represents the date of our follow-up survey, which was, as you can see, shortly after kind of the peak of the number of infections and deaths in the Hubei province, at least. As I mentioned, quarantine conditions also vary pretty significantly between provinces. So within Hubei and the city of Wuhan, where the quarantine was really the most strict. So individuals were not allowed to leave their apartment unless they had really kind of a written approval and a specific reason to do so. Supermarkets, grocery stores, and pharmacies were completely closed for civilians. Instead, food and necessities and different types of supplies were supposedly distributed by the members of the local government, and this was done on a kind of an apartment community by apartment community approach. And there's been a lot of kind of things on social media about this being kind of unfair and people not being so happy at the actual outcomes, but this is potentially how it was supposed to occur. Public transportation was completely closed, and the police were essentially patrolling the streets to ensure that no one was kind of leaving the apartment and being outside without a specific reason. If they were found to be doing so, they were placed in kind of police-forced quarantine. So, I mean, something you would surely want to avoid. And again, there's been some reports on social medias about how this was a really kind of a strict procedure, and the citizens were actually deterred by it. In other provinces, there were some definite elements of quarantine, and for sure it was not an easy time, and it surely is not now either, but it was a little bit less strict. So supermarkets and stores and things like that were open. Households could appoint one individual within the household who was allowed to leave and go shopping and things like that every couple of days, something like that. Public transportation was still partially open, and there wasn't really police arrests and forced quarantine as far as we understand it. Okay, so let me tell you a little bit about our survey and our kind of data collection. So typically in a university in China, the administration is creating groups of about 30 to 60 students, which are referred to as cohorts, or at least is what I'm translating into a cohort. These cohorts remain constant over time. So even if an individual switches like their major or their study program, they kind of hold the same cohort, unless they're, and they only kind of leave if they're leaving the school altogether. And these cohorts are mixed, so you might have colleagues who are in a physics program or a humanities program or an economics program. That doesn't really matter. So we partnered with with the administration essentially, and each cohort has a supervisor or a leader, which helps kind of coordinate administrative things and make sure that the students and the students are at the different events that they need to be in, and so on and so forth. And all of this is kind of communicated through online tools and tools that can be used on a phone or a mobile device, such as WeChat. Basically, we work directly with the supervisors or these leaders of the cohorts to basically reach out to different subjects and students to get them to participate in our survey. One benefit is that we have a very high response rate. We can, since the surveys are organized by their leaders directly, it's kind of almost like an academic program. And we also provided a small kind of nominal cash incentive for individuals to participate. So in wave one, again, this took place in mid-October. This was, in person. It was physical pen and paper at the University of, the Wuhan University of Science and Technology. We essentially randomly selected 8 of these 30 to 60 student groups from a pool of 90 at the university, and therefore had 257 subjects from master's study programs. We asked for kind of standard demographic information and questions on individuals' general willingness to take risk, kind of from the dominant co-authors and Falcon co-authors, general preference modules that are kind of used in surveys and validated experimentally. We also asked questions related to individuals' beliefs in their own luck and luck in general, if they kind of believe in luck, and also how these are linked to superstition. We asked some survey questions on how subjects would rank themselves in terms of investment performance, based on kind of performance and luck as well. And we asked some questions related to illusion of control and individuals' own self of control over their own outcomes. And this is also linked to gambling and luck behavior from the psychology literature. In wave two, again, I mentioned this is February 28th through March 3rd. Again, we worked with the same cohort leaders, and the leaders passed our survey links via WeChat to their group. This was, of course, an online survey, and because of this kind of setting and the collaboration with the groups, we could reach essentially almost all of our same subjects. So in this wave, we then asked all the questions we asked in wave one, including, I didn't mention the first time, we also asked a number of financial literacy questions, which we use as a kind of an important control variable. Anyways, we also asked a risk allocation task, so individuals could allocate a hypothetical endowment between a safe lottery and a risky lottery. This is just based on kind of standard, it's a survey version of the Gnisi and Potter's task. We asked a number of questions related to generalized trust. We asked about individuals' assessment on future returns for the Shanghai Stock Exchange Index, and then general questions about subjects' exposure and experience to experiences with the pandemic. Okay, so given that we have a number of questions which we only asked kind of in wave two, and a number which we have in both survey sets, what we do is we have a cross-sectional approach and a panel approach. Essentially, we're just going to regress location dummies on our outcome variables of interest. In the panel setting, when we have a repeated measure, we're just going to interact these with the wave from the survey dummy. Our variables of interest here are therefore then kind of Wuhan and Hubei, which are indicators for if the individual is quarantined within the city of Wuhan, versus in the entire province of Hubei. So Hubei is an indicator if you're in the province, but not in the city of Wuhan. Okay, the first kind of thing we want to look at and is really, given that we've seen this variation in the objective exposure, in a sense, the number of infections and deaths between geographies, we want to understand if individuals also hold subjective beliefs that are consistent with this exposure. So we find that subjects in Wuhan relative to subjects in Hubei and relative to subjects in all other provinces in China, in fact, hold higher subjective beliefs about their own exposure to the coronavirus pandemic. So they're more likely to say, yes, that there are confirmed cases in the community where they live. They're more likely to say, yes, there's more deaths in the community where they live. And there's more likely to report that there are confirmed cases among their network of family and friends. This is perhaps not surprising, but I think it's kind of a first start. They're also more likely to agree with the statement that they are likely to become infected with COVID-19 relative to subjects in other provinces of China. Given that, they have higher subjective expectations of becoming infected and feel that they're more exposed to the coronavirus pandemic, we want to understand how these relate to essentially to risk-taking. So looking first at our kind of March 2020, so this is only the second wave of our study, and it's a hypothetical question about how individuals would allocate an 1,000 won endowment. So we find that subjects across other provinces of China allocate about 300 and a third of the endowment to the risky option, and this is monotonically decreasing by the exposure investors hold, or subjects in hold rather. Subjects in Wuhan allocate 80 won less than subjects in Hubei, which is about 60 won less than subjects across the rest of China. This is a significant and an economically significant difference. It's about 45% less investment relative to subjects across other parts of China. This is simply a table which kind of shows that it's statistically significant, so I'm not going to bother you with that too much. When we look at kind of general preferences for risk, as measured by an index based on the Falcon-Doman questions, we find something slightly different. We find kind of this general uniform decrease in these preferences for risk. So it looks like everyone in the subject, regardless of their exposure, are reporting that they would be less willing to take risk in March relative to October. And here you see again the kind of regression framework from here. The interaction terms are negative and potentially sizable, but statistically indistinguishable from zero, and all the variation is really captured by the time trend here. So essentially, why do we find that exposure is affecting risk-taking, but not really general willingness to take risks? It could be that risk-taking is potentially not entirely driven by general preferences for risk, but rather from other attributes such as optimism or beliefs in individuals' own outcome. So what we want to do now is kind of study how these beliefs and how these measures evolved from pre to kind of mid-coronavirus crisis. We're going to look at a couple of different things. The first is a measure we call belief in individual luck. So this is a number of survey questions, which are things like, how much would you agree with the statement, I feel lucky, or I have lucky days, or I'm a lucky person, and so on and so forth. What we find, again, pre-coronavirus times, so in October, we find kind of no difference between different subjects located in different places. And of course, after the crisis begins, we see a large reduction based on exposure to the coronavirus crisis. So these people are reporting a lower belief in their own kind of luck. A similar index of questions asks how individuals would rank themselves relative to others. And essentially, individuals in Wuhan report that they would have worse luck than others. So this is increasing and kind of indicating that people feel less lucky if they are in Wuhan. Finally, we ask a number of questions related to individuals' sense of control or illusion of control over these types of outcomes and lucky situations and so on and so forth. And again, what we find is a pretty significant decrease from those who are exposed to those who are essentially unexposed from pre to post or pre to during crisis times. This is essentially the regression framework from this, so I don't need to go through it in much detail. But just to kind of reiterate, we find that subjects with higher level exposure seem to make strong downward adjustments in kind of their beliefs about themselves and about their general levels of optimism. The last question we want to briefly examine is, how does exposure potentially affect beliefs about kind of things that are not related to themselves, but about the economy and about social conditions in general? And kind of just quickly to take you through some of these questions, we ask 5-point Likert scales about how, if the individual agrees or disagrees with the following statement. And we find that subjects in Wuhan are reporting a lower agreement with the statement that the economy will improve in 12 months. They are less likely to say that the environment will improve in 12 months. And they're also giving lower, they're also more pessimistic about their own health improving in 12 months. Finally, we also look at their kind of expected return from the Shanghai Stock Exchange Composite Index, and we find that subjects in Wuhan are also reporting a lower expected return. Of course, the standard errors here are quite large, so I wouldn't draw too much from this, but we're actually, essentially, we're finding that this effect seems to also have some sort of impact on their beliefs about the economy and social conditions in general. Okay, so I'm probably close to out of time, so I'm going to wrap up. What we do in the paper is we use repeated measures of beliefs about subjects' kind of own outcomes and measures of their risk taking and preferences for risk, essentially to understand how this evolves from pre to peak crisis. We find that the exposure has pretty strong heterogeneous effects on risk taking. However, not so much for general measures of risk preferences or risk appetite. At the same time, we find a strong decrease in optimisms and beliefs related to exposure. So we think that there's an important link there. And we provide some, I would say, some small evidence that this seems to carry over to beliefs about the economy and social conditions as well. In general, what the punchline is that short-term risk-taking is definitely affected by heterogeneity and exposure. However, this could be more influenced by changing beliefs and expectations rather than general preferences for risk. So thanks so much. Yeah, looking forward to your comments.